Hi, good afternoon. You're watching Your Stocks. I'm Sumaira Abdi, and with me is my colleague Mangalam Malu. Well, Mangalam, we were all hoping for a lot of green, but perhaps closer to 50,000. It looks like there's some bit of jinx coming through.
Absolutely. It looks like there is a bit of jinx coming through. And, after the record high that the Nifty Bank hit after almost a year or so, we're seeing some bit of profit taking on that as well. The Nifty Bank now down by almost 1/5%, but the Nifty itself is now, below the 14,500 mark. And that's important because remember yesterday we did see a fair amount of writing at the 14,500 put. Bulls were hoping that maybe 14,450 to 14,500 could be a support zone. So let's see whether that continues or not. And just as we speak, a lot of these stocks, big heavyweights, are actually at the low point of trade. We have Reliance, which is underperforming, down almost 2% after the 3% rally yesterday. HDFC Limited, Titan 2 has broken the 1,500 mark, and Sun Pharma. So across the board, there is some selling. We don't know whether this is just a dip, some profit taking, or perhaps something more. But all of that and more over the next half an hour and towards the close of market with closing bell as well. But first up, all the top stories that we're tracking this afternoon. Profit booking on the Dalal Street market comes off sharply from the morning highs. The Nifty and the Sensex see a cut of almost 1/3% each. We have mid-caps as well as the other indices bearing the brunt. The mid-caps actually now down by almost 1.7%.
Bharti Airtel shares jump after it receives all approvals to up the FII limit in its subsidiaries to 100%. Brokerages expect $500 to $700 million of additional FII buying once MSCI revises the stock weight in its indices in February.
A stellar Q3 performance by Tata Elxsi with revenues growing 11% sequentially and margins expanding to 30% provides a boost to mid-cap IT stocks. A report from IT Biz Tracker ISG indicating strong growth in managed services also instills optimism.
Nifty Bank crosses its previous all-time high after 13 months. It's held by ICICI Bank and PSU banks, which are rallying on attractive valuations. Steep fall in December inflation also triggers investor interest in bonds, banks and NBFCs.
Oil PSUs like BPCL, IOC surge on hopes of a fuel excise cut. ONGC rises on crude price surge, while most PSU stocks are higher, making the PSU index the best performer in an otherwise weak market today.
So let's get started. Rajat Bose of rajatbose.com and Parthiv Shah, Director at Tracom Stockbrokers, join in now to answer our queries. Gentlemen, good afternoon to both of you. The first query comes in from Devika Das, and she's on the line with us from Bengaluru. Devika, good afternoon. How can we help you?
Afternoon. So my query was, I hold some Wipro shares right now. Wanted to understand if there is a market correction which is impending for Wipro in the foreseeable future. If so, how much would that tentatively be?
Okay, any reason you're expecting a correction in Wipro?
Yes, because it's rallying quite a bit. And everybody around me suggests that there is going to be a correction which is due on it. So just wanted to understand if there is any...
Okay, got it. So, Parthiv, Wipro also announces numbers today, incidentally. TCS has been a fabulous showing. Wipro, for them, Q3 is a seasonally strong quarter. You think all of that, the expectations are already priced in? What our caller is talking about, that perhaps there's a correction long overdue. Do you believe that? And therefore, would you recommend booking out the profits now?
Good afternoon, Sumaira and Mangalam. See, I do agree that Wipro, after a very, very long time, is showing some traction in terms of its business momentum. Especially, we track these IT companies based on their constant currency growth, how well are the utilization levels, and more importantly, how well the margins are also panning out, how is the deal pipeline. All of which, if we see, of late, there are a lot of green shoots, even in Wipro, that after a long lag as compared to many of its peers like TCS, HCL, or Infosys, I think Wipro is showing some traction. So this particular set of numbers today are going to be extremely important to know the further trajectory, because already the stock has rallied quite well running up to the numbers. And the commentary that we heard from TCS sounded not only like it's a TCS centric commentary, but it's like a commentary which came for entire IT industry, where a lot of deal pipeline renewals are taking place, big size deals are happening, and client confidence is at quite high levels. This definitely bodes well. In terms of the correction, always a 5-7% correction in stock like Wipro can't be ruled out. But my sense is, if the investor is a long-term investor and if their commentary today bodes well in parallel with the entire IT industry, then my sense is that Wipro is still quoting at a 20 to 25% valuation discount as compared to its other peers like Infosys, HCL, and TCS. So if they are able to perform this time, certainly there's a catch-up to be played. There's a change of management guard. It's more professionalized, and I believe that Wipro can do well from here.
All right, fair point. That's the view coming in, the fundamental view. Rajat, your thoughts? I mean, she is worried about a fall in the stock while she is making some profits. So maybe some profit booking would be prudent?
Well, I would say that her concern is for real, especially if you look at the charts, the IT sector. I mean, you can see continuation of this bull run in case of Nifty, in case of even Bank Nifty, I mean the bank stocks or others. But regarding IT, Mangalam, one thing what I find is that it is an even steeper rally that we have seen in tech stocks than what we saw way back in 2000. And for instance, say come to the point to Wipro, from 348 on 21st December and 456, less than 30 days, but 30% appreciation. And as Peter Brand, a venerable trader on Wall Street, says, if it is a parabolic, then the parabolic has already happened and nothing more is left. It isn't as if that Wipro cannot move up from here. The point is that these parabolics are always corrected very sharply, and that sharp correction can come in the whole of IT sector at any point in time. So I would say, if I were in her shoes, I would definitely book part profits. Of course, I'm not saying that you sell lock, stock and barrel, because it's a liquidity driven rally, and despite Mr. Das's so many overtures about the financial market going completely out of whack with the real economy and all that, it has not corrected, but a correction might be well in the offing. So part profit booking is definitely warranted.
All right, but you know, your commentary on market is well taken, Rajat. Right now, the mid-cap index is down by almost 1.5%, and just as we speak, the market breadth has worsened. When we started the show, we had nearly 2 stocks in the red for 1 in the green. Of course, that was also worse than what we saw earlier. And now we have nearly 3 stocks in the red for 1 in the green, and there's a big decline across the board. The NBFCs are losing the most, but we have other stocks as well, the big movers. Info Edge currently at the low point. A big dip is what we're seeing on Aurobindo Pharma, Muthoot, Manappuram, Federal Bank as well saw a big cut. So both the red and the green lines are at the furthest point that they have been all through today. Good time to get in another query then. We have Akshay Surya, who writes to us from New Delhi, holds about 600 shares of Tata Steel at 92 rupees and 920 shares of KC International at 28 rupees. Wonder when he bought Tata Steel for it to be sub 100 odd rupees. A big gain is what he's seen on that stock. While KC International as well, he bought it at 28. He's sitting on a more than a 10 bagger out here. So first up, Akshay, good good strategy for buying it low, holding through, and enjoying the fruit of your hard work. Parthiv, your thoughts? He's sitting on big money. Do you think he should book profits now?
See, in terms of Tata Steel, what our sense is that it is still in a mid-cycle. I won't call it at the end cycle or a peak of the steel cycle, because looking at the demand trends, and despite the fact that the steel prices have been in an uptrend continuously, yet I think the demand has been strong, goes to show that I think going ahead, next 2 quarters are certainly looking extremely good for companies like Tata Steel, and more importantly at a regime where the iron ore prices are hovering around $160. Tata Steel has a lot of its captive mines in India, which have ramped up quite well. The coking coal prices have held up quite well. So the spreads, I believe, in quarter 3 and quarter 4, in terms of EBITDA by ton, could really surprise to the upside. We are expecting anywhere between 17 to 18,000 rupees a ton, which I think should bode extremely well for further deleveraging of the balance sheet, which is slight concern in a company like Tata Steel. But I would suggest the investor that you have been a long-term investor, you've been richly rewarded. I think sometime in quarter 4, I think won't be a bad idea to book out of Tata Steel if at all you see levels of around 800, 850. That is where I would suggest an exit. Talking about KEC International, again a great entry point at 28 bucks. I think this has been a tremendous stock in terms of wealth creation from the time this investor is invested into. We are upbeat on this space because when I talk about transmission and distribution, and more importantly the railway signaling and electrification, KEC is the company which comes into picture. It has held on different cycles quite well. It has executed quite well. No doubt it has had its times of stretched working capital cycle, but they've always managed the balance sheet quite well, even in tough times. Going ahead, we are expecting loosening of funding and losing of pockets even from the government in a lot of capex, which should help companies like KEC International. So here I have a longer term view. I would suggest for 1 or 2 years, please hold on to this stock.
All right, gentlemen, do stay on with us. By the way, those are CESC's numbers coming through on consolidated numbers. Net profit is up about 20% coming in at 324 odd crores. Mangalam, have you had a chance to see the other numbers? I haven't seen them. But anyway, revenue picture coming through as well. So up about 10% over there. So 2,500 crores in terms of top line. So both numbers for now looking good. But we'll take a break, come back with more details on CESC. And before we take a break, we'll bring you up the CNBC TV 18 budget quiz. Remember, there are prizes to be won every day. So we gave you the question at 9:14, but if you've missed it, here it is again. What was the revised revenue estimate for the Union government in 1947-48? Those are your options on the screen flashing for you, A, B, C, and D. Send us your answers on Twitter. Post your answer as a comment on the question tweet on CNBC TV 18 News. Use the hashtag budget with CNBC TV 18. Hurry up, send in your answers, and remember, the winner will be announced at 3 this afternoon.
Welcome back. We have some more details on CESC. Apart from just the numbers, the company has actually announced a 45 rupee dividend, which is a big amount given the company's 600 rupees share price, and which is why there's a big move that we're seeing on the stock from the lows. So near 6-7% sort of dividend coming in terms of dividend yield at 45 rupees. And which is why the stock has seen a sharp recovery from the lows, despite numbers being absolutely flattish. We did see a near 11% growth in the company's EBITDA, but it's the dividend which is exciting the street. In fact, someone was sussing it over the last couple of trading sessions, because if you notice, in just the last 2 trading sessions, we did see the stock move from levels of almost 600 odd rupees to close to 670 odd rupees. So that's about CESC. With that, we move on to answering queries. We have Naveen Reddy calling us from Hyderabad. Naveen, good afternoon. Tell us.
Sir. So I have purchased Snowman Logistics at 63 rupees,
Okay.
400 shares. And market is going on corrections today. So can I add more on the shares and do an average for me? I mean, for the Snowman Logistics, or shall I wait with this 400 shares and should I sell it out with some profit?
Right. And is it just a trade that you're doing, or is it something that you're looking at from a long-term standpoint?
It's just trade. Like my term is like 1 month of term.
All right, 1 month. You probably have been 1 month late, because the stock in November was close to around 35 odd rupees, and then when the vaccine news came by, from there we've seen a big move. And Parthiv, you think he's gotten at the wrong time for a 1 month sort of trade, because the vaccine move sort of happened in the last 3 months?
Yes, absolutely, Mangalam. I think he's quite late to this rally. And what has happened is that a lot of retail investors do tend to get carried away with such stories in such a bull market where this vaccine could help players like Snowman Logistics, Blue Dart. But again, Mangalam, in the past, historically, we have seen that a lot of this hype does not percolate into good earnings. And my concern with Snowman has been its checkered past in terms of how the earnings have panned out. They've been quite volatile, whether in terms of the margins or the ROEs or the ROCs. So not extremely comfortable here in terms of the valuation. As such, he's having a very short-term view of 1 month. And I doubt if the stock could go anywhere from here. But I would not really bet on this stock at this juncture.
Okay, the next query comes in from Sumit S, who has written in from New Delhi. He has 100 shares of Maruti Suzuki, which he's got at an average price of about 8,300 odd. He's been holding on for 3 years now, so making some losses there. And, he's a long-term investor, wants to know what to do. Rajat, on Maruti, you see the previous highs returning, or you think just too many issues with the auto space for now?
Well, from a technical point of view, I would say that I have reviewed the whole of the auto sector from a technical chart perspective. Two-wheelers, four-wheelers, commercial vehicles, out of them, two-wheelers and four-wheelers, passenger cars, these charts are really very good. And I would say that chances are the bull market continues and Maruti might actually retest its earlier high. That is the kind of signals that are emitted by the end of day price chart of Maruti. I would suggest continue to hold on because you purchased at a very high price and then it went down, then again it has come back to your levels, and now probably you will be making some money. And if you get out right now, this is the very common sentiment that happens to investors, that once my price is coming back, I would get out because no more pain. But this is now going to give you some money. So there is a possibility that at least you will make 10 to 15% from your purchase price. So continue to hold on. Maruti still looks good.
All right, that's the view coming in on Maruti. With that, we have another query. Mr. G. Radhakrishnan writes to us from Bengaluru, holds about 1,000 shares of ICICI Bank at 200 rupees. A long-term investor wants to know whether to hold or sell. Rajat, this one's right up your alley. Bought a big quantity at the right price, now enjoying the fruits of it, close to around 2.5 times in terms of gains. Coming in, do you think time for him to book some profits or hold on to ICICI Bank?
See, unless he is a short-term player, I would not suggest booking profits, because if you remember, Mangalam, at least coming on your show every week on this day, I have been harping on a banking sector rally, and that rally has started happening. There might be a minor correction, minor consolidation, but the banks are going to go up, and so would ICICI Bank. So I suggest he should continue to hold on.
Okay, Vineet Sankara has written in from Andhra. He has 1,000 shares of Clarent Chemicals at 400 rupees a share. He's looking for a long-term as well as a short-term view. First to you, Parthiv. Okay, one second. There's some news from the cabinet. They've approved some mining reforms to auction 500 mineral mines, which could actually double the mineral production. So as of now, this is what we know. I think we should get perhaps Nigel or somebody who can explain to us the impact, of this news. Parthiv, you think it's significant? Mining reforms, approve 500 mineral mines to be auctioned?
Sumira, I think kind of need of the hour. Looking at the crisis that we are seeing in the Odisha iron ore mining sector, where the post auctions there haven't been ramped up. I think there's a lot of chatter in the government cabinet note that they need to come out with very decisive policies in tandem with the center and the state and try to ramp up the production. It's not only about iron ore, but even manganese ore, coal. A lot of reforms are needed, and government has been talking about commercial mining licenses and leases to a lot of corporates. They're opening doors. So I think any such approval from the cabinet in terms of easing out things, and they're even trying to attract a lot of foreign players, and a lot of foreign players have been hesitant to come into the Indian mining markets because of the regulations, the royalties and the levies that are there. It's very challenging, but I think this is a huge industry and create a lot of jobs, and I think it can really add to the GDP. So any sort of major mining reforms would bode extremely well.
All right, we are seeing some, up move on the likes of Coal India, though we're not sure of what kind of listed stocks this would impact. But nevertheless, like he said, good news coming in from an economic and industry standpoint. The next query comes in from Andhra Pradesh. Vineet Sunkara writes to us, holds about 1,000 shares of Clariant Chemicals at 400 odd rupees, looking for a long-term and short-term view on the stock. Short-term, Rajat, do you think he's losing some money? Should he hold or sell?
I think Clariant, you may continue to hold on if your view is, if you are looking at medium to long-term perspective. But unless that is your perspective, that kind of time horizon you have, I don't think Clariant is going to go up to those levels that he is looking for. My suggestion is switch to SBI, and if State Bank is a much better bet. I'm looking at 375 going forward, so that would give a better returns than Clariant Chemicals. But if he is willing to stay put, then put a stop loss at 290 and continue to hold Clariant. But if I were in his shoes, I would have definitely switched to State Bank of India.
All right, Parthiv, Rajat, thanks very much for joining in. With that, we'll wind down on your stocks, but do stay tuned. The market is under pressure, and the team of Closing Bell will take you through the last hour of trade.